Well, last week was obviously really tenuous for the S&P 500. It did dip below support and even finished the week there. So the level I was watching is 2640, and it's really this week is very essential in that we needed to see it come immediately back above, and thankfully it has done that, and it looks like we're in store for a strong close this week. I always look for breakdowns below levels to be confirmed, not just by a day, not just by a week, but by 2 weeks below a level, and that helps me avoid shakeouts or false breakdowns, and I think that's indeed what we saw last week, which actually looks like a successful retest of the October low to me. Even though the S&P 500 didn't get back there, we did see the other major indices, in fact, dip below their October lows. At the same time, the indicators that we track actually established positive divergences. So the market's set up very well right now into year end, assuming that we do close strongly this week. We have positive seasonal influences at play here. And now, of course, we do have that widespread oversold condition. And with the improved momentum that we've seen this week, it leads to upturns in the indicators that are really promising in my work.
You know, as a real technician, me as well, actually I'm not, but I'm smart enough to see that looked like some type of positive pattern on the far right side of that chart. But there's other head and shoulders patterns that didn't turn out so positively. But doesn't that one look pretty good there, or is it?
I think so. I mean, that inverse head and shoulders is still valid for the S&P 500. It wouldn't be completed until we see a breakout above resistance, which is right around 2812.
2812.
Breakout above, right on the upside. So if we do see that level cleared, I think that's where you really see that pile in or that chase start, because sentiment is so incredibly bearish right now. That's really a contrarian positive as we get into year end. You've noticed that too. Yeah, but Mike Santoli had the same number, 28, on some charts he was drawing last night, that there's been previous both support and resistance at 2800, and it hasn't gotten through there a few times. So and you're at 2812, you say, if we get through there. Right. And I think as we see a rally into year end, we'll actually see outperformance from the stocks that have been most beleaguered or beaten up the most, because those are very oversold for one, but also have the most room to resistance. So while they're not the best charts in the world at longer term, they actually have more upside in the near term than, say, a stock that's actually maintained its gains and kept momentum.
So, go ahead, Peter.
Underneath that, those increases and decreases you show on the chart, how about volatility? What's your view on the level of volatility in the market and what's going to happen there?
When I look at volatility, I'm just thinking about sentiment as a technician. So the VIX could have certainly gotten higher, but what we looked at was actually this fear and greed index that we track, and it was at its deepest oversold or overly bearish condition for really many years. So that taken together, the extremes in sentiment, I think we're strong enough to say that we have an intermediate term low being established by the major indices. And now, of course, it's just a matter of support levels being held, and so far so good. You've been with us every step of the way on this most recent correction, holding our hands, and my hand, I guess, really. But you noticed I've noticed it anecdotally that we went from, all markets correct, and wow, this is acting just like a garden variety correction. That was about a month and a half ago, I think, or a month ago, to where, we really did, when we went back and tested the lows a couple more times, we really did go to where people were saying the cycle's over in the stock market, cycle's over in the economy. And suddenly what went from, gosh, could it get any better than this with interest rates and inflation? It went to, gosh, everything's wrong. So you could almost see it happening. And you saw it in some metrics that you follow as well to confirm that, I guess. Well, we did see a gap down last week, and that's actually very unusual during the Thanksgiving holiday week. And because it was filled so quickly, it's really reminiscent of, if people want to refer back to July, early July, there was a very similar setup. And really, the market didn't look back after that, at least for several weeks. So I think that's the kind of setup that we have right now. And like you said, the sentiment really is conducive.